Hello everyone, this is Moshe the Electric Israeli, and thank you for joining my channel. If you are new, please subscribe and help me change the world one electric car at a time. Thank you to all of my patrons and those who order their Tesla using my link. And today I'm going to talk about the sudden rise of the Tesla stock after it got absolutely slammed after the earning report last week, and down by like 14%, $37 in like one day. Then it got like stabilized, nothing was going on too much, and then all of a sudden the last 2 days went up by over $7 one day, over $6 yesterday. So it's like $14 swing. And the question is why? Why? It's like the same question I had when the earning numbers came. And if Tesla broke all sales record and all of the accomplishment that they did, why did they lose money? So, well, there's a lot of numbers within the numbers that we always have to look at and to see what are the reasons. Obviously, margins are incredibly important, very important. Margin is how much you sell anything and what is your profit. Okay, if you make something for $10 and you sell it for $9, you're losing. All right, but if you sell something, you make something and you sell it, but the margins are very small, very small, especially with cars which have a lot of little things going on, then it's also not so good because you always have to put capital investments. So that's exactly what we did. So yesterday I read a very interesting article by this amazing reporter. Her name is Claudia Asis, and she's from MarketWatch, based on Macquarie research. And then what the research says is that Tesla, and this is a quote, Tesla will have solid gains and profits from what it looks like, much more solid than what you think, than what you see. And they base their analysis. This is not a theory. This is based on numbers. Analysis on the investments that Tesla made, especially in manufacturing savings. All the operation savings that will eventually save them $66 million this year. And overall, from the beginning of the year, they've been saving $130 million, okay? So they made some shrewd investments in proficiencies, in infrastructure, in what is it called, their core business, which is charging, manufacturing, battery, research, all these things that, you do it one time and that's it. And so it will show, the benefits will show themselves going forward, okay, going forward. So it's like if somebody, okay, let's take the Tesla. So the Tesla Model 3 I have is a very big initial cost, but the ownership experience without the gas savings and the maintenance savings, that's going to add up in the grand scheme of things of, let's say, 5 years of ownership or whatever it is, to be by far more profitable and wise and lucrative than it looks at the beginning. Okay, so you buy a cheap car and then you start shelling money on maintenance and on gas, and later on when the car starts to break and fixing and all the components and the radiators and all that stuff, so the total cost of ownership is exponentially more than what the initial cost was. That's really the simplest way to understand this. I mean, this is really the simplest way. So their investment in efficiencies, in improving the line of production, and in charging, and in maintenance experience, all those things, all those little nitty-gritty things will explain later on their savings and potential earning. But that's where we have to say, let's wait and see. Literally, let's wait and see. And quarter 2 is coming. I mean, quarter 3 is coming, and quarter 4 later on, and then we'll see what happens. Really, we'll see what happens if they're going to harvest the crop of the seeds that they sow. Okay, guys, let me know your thoughts. Thank you for watching. If you like this video, give me a thumbs up, and I'll see you tomorrow.